Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Wednesday, the 25th of May, 2023. The time right now getting on to 6 p.m. Central Time. What a day. Never saw anything like it. I think it broke a record today of adding market cap of $200 million plus, I think, to NVIDIA. Wow. It proves that this, number one, it proves that you can monetize AI. Simple fact. Here's the chip. It's doing it. The stock went up because they proved that the sales are insane. That's putting it mildly. They've got the market for the short term cornered on the type of chip they do, the speed that it does everything at. That's it. People have asked, why NVIDIA? Well, you know, if you were into gaming, you've understood this company all the way along. If you owned a gaming computer, and I've owned them, and I don't play games, but they're great for computer trading, the speed, what the screens do. Their boards were just, that's the only board I ever wanted. And now their chips are that way for the AI. So they've really done something that other people didn't do. So applaud them. It's phenomenal. Now, what else going on? Well, why don't we take them one at a time? The energies got hit today pretty good because Russia's Deputy Minister Novak said, nope, OPEC, they're not going to cut production at the next meeting. How he knows what they're going to do. When we saw the Saudi oil minister just threaten on Tuesday the shorts that are in Brent by saying we know who your positions, we see it, we wouldn't recommend it, you can get hurt, the threat. And now we're hearing the opposite from Russia. Now, the one thing we know is Russia doesn't care if OPEC cuts production. They're not going to because they haven't. They've lied all the way through. They have a war going on. They're going to keep going. And as I told you, logic told me, and I'll stick with it, that the world was divided by OPEC plus. The plus got the Asian markets where they can sell, maybe parts of South America, other areas where not too U.S. friendly. The rest of the world was given to OPEC, and they can do what they want with all that because they're friendly in that way. And so I looked at it and I just said, okay, I don't know what they'll do. But at the end of the day, there's not going to be a price war. We saw what happened last time. Russia has to sell oil. It's selling it at a big discount. It'll stay as a discount until the war is over, most likely. I can't guarantee it will, but most likely. And the other problem that's going on is China can't be this huge buyer right now, unless they're just storing oil. But why are you storing $75 Brent? I don't know that that's a bargain. I'm not convinced, as Goldman keeps talking, that you're going to $100 crude unless the world economies pick up, and they haven't. By the way, I wanted you to see this. You see it? We're going to talk my sale at the end of all this. So please don't leave. You can get my trading courses for free. I want to show you how to do it. And the sale's going to end in 5 days. So it goes away pretty fast. Notice you're not even getting a bounce in the bonds and the notes. Bingo. Problem there. If you look at the stock market tonight, we're all trying to second guess ourselves what is going to happen on the debt ceiling. And this is a drama. Number one, they might reach a deal. Could be between now and certainly the weekend. I don't know. They want to get it done in 3 days. So far, McCarthy is not saying he's waiving the 3-day rule. He's saying he can send the bill to everybody on their vacation. And yes, they're all gone. The Senate is gone and the House is gone. They are left. They're out of the building. They're with Elvis. They are all gone. You look at that and you say, okay, but what's in the bill? What if it gets dragged down? The rating agencies, while we saw Fitch get aggressive and put everything on warning, I haven't seen that on a lot of them. Some of the smaller ones have done that. They did it last night. But the bigger boys, like Moody's, is saying, I think I'll give you to the 15th. If you miss any payment, you go down, and until everything gets rectified, you stay down. So there's the punishment date. Now, that can be avoided in many ways. Number one, you don't have to miss anything. Why? Because by the 15th, you're going to have state tax money coming at you. All that other, you get another group of money coming in. What we've all been concerned about is, number one, will the June 2nd, 25 billion get paid? And then the regular Social Security numbers that go out, as you know, typically on Wednesdays, and depends your age and when you were born and blah, blah, blah. All right. Those are the things you look at there. As for the dollar, well, everybody's scared to be anything but owning the dollar if the default really takes place. So it kicks up the interest rates. It can't help gold. Why? Because gold's headwind is higher rates, and you have higher rates. You know, you got some numbers that are 7% in real short-term money. You heard me right. I didn't misspeak. 7%. How do you fight that in a strong dollar at the same time? So the gold is sold off $140 from its peak. The copper market and the silver getting sold off because industry's rocking and reeling. You're starting to hear that and see it, okay? These interest rates are really high. They will slow the economy down. The Fed is going to tell you that. You're hearing it on the different Fed speakers. And very shortly, we're not going to hear from those guys, because before you know it, you're going to be in the quiet time before the June 14th meeting. But get ready and buckle in. You've got jobs report coming sooner rather than later. And when we get to that report, you want to be looking. If that's a strong report, I don't see how the Fed doesn't go another 25 points. The only way they could not go is if there's no debt ceiling. We could wobble so much they're scared of pushing everything over. But if you have a deal on the debt ceiling and you have a strong jobs report and then a strong CPI number, you're going that 25 points, in my opinion. Doesn't mean I'm right. But if you watch TV, everybody's taking a position. Wobble, and I can argue about the pause. Remember what I said, I'm going to come into everything else. But on our Memorial Day sale, you purchase any of my courses, any of my research, a 1-year version. So the morning subscriber video, $156 a year. What are you spending? $14 a month or something? Okay. The Spider ETF, just slightly more, a couple of dollars more a month. That's it. Or the full research, where you get all my twice daily written, Monday through Thursday, a Sunday edition, a Friday morning edition, and special reports, along with the morning subscriber video, is as low as $400 for the year. So many different ways that you work this out, okay? How do you take advantage and get the freebie? The freebie is any of my charting courses. So it can be the Bollinger Band, the Outside Day course. I don't know if you've been watching Outside Days. They've been real important. Or the morning subscriber video. So any of them. They're all almost as much or more than the subscriptions. Got it? So it's a freebie. It's 5 days. How do you get it? At any point, move your cursor to the top up here, and you'll be taken right to it. Okay. I wanted to do that before we got to the charts. So now, on the S&P, where are we? All right. You still have an upside bias in the market. The market for the week, I know it doesn't feel like it, but it's down 1.17%. When you take a look at what the chart's doing on a daily basis, you're sideways as can be. Your trend is down. I know you're going, what's he talking about? Well, you got lower highs, lower lows. The battleground is just what I teach in my full charting course. The red line's the 18-day average of closes. You will learn, if you take it, that you extend down. It's very typical to pull back to that number and fight a battle. Get over it. If you're going to pull back, you fight your battles. And from there, you eventually make your move up or down, as you will see over and over. I teach you how to look for that, what you see with that. Number two, you're going to look and see where these Bollinger Bands are and how to work with them. Just because you hit them doesn't mean you come out of your positions. You want to see what to do. I teach that in the course. Right now in this market, you've got the trend down, the resistance was here, and you're into no man's land. You're not bearish yet because you're over the 18-day average, but momentum is down. So momentum down, trend down, bias up. Then we get to the powerhouse. Now, here's what happened, and let me walk you through this. You lost the embedded reading on right here, Wednesday. The only time you can get it back, and I think that's where the pros came out, is if you re-embed the day after you lose it, which you did. Now, the market gets bearish the next time it closes under it and probably stays that way for a bit. Until that happens, you're not there. Is there a trend per se? No, this is what you call a bear trap. On that break, you caught the bears, and when the video took off today, bang, everything went with it. But notice where the market stopped. Nothing changes. Throw the name of the chart off. Try to not analyze it that way. Analyze the picture of the chart, and you'd be way ahead of the game, in my opinion. That's what I teach in my courses, especially the full charting course. That's how you go about it. I'm now starting to get ready to redo the course. It should be done by the end of the summer, all new version of it. But the old one is great. It's one of my best pieces of work. Lower low, higher high, and right back to falling apart. Why did this not participate? Because it doesn't have tech in it like NVIDIA. That's what did it. Got to look to see how much of NVIDIA was in each of the sectors that do these. Russell, same thing. It's not there. Higher high, lower low. So you got the Dow and the Russell left out. The children that weren't let in the house. And then you had, I think 5% of the S&P or something had weighting in that area. Away you go. And same thing, obviously a pretty good weighting in the NASDAQ. So important. All you got to do is go Google what percentage is in that for each one, and you start learning. T-bonds, it's just bearish. Each rally is getting sold. I'm telling you ahead of time, this market's getting overdone. It's because of the debt ceiling. When they resolve it, you'll get a pop in the market. But you had a bearish crossover right over here. The 18 got under the 100. You made the new low. That's what the work will teach you. You will learn to look for these things. In the 5-year note, down, embedded reading. Rallies, will they be sold? I think we want to be careful of that until we see the debt ceiling bill and understand is it going to pass or not in your own head and what the press says after interviewing some people on it. Then I'd approach it that way. Dollar index, same thing. So do you go home with positions long the dollar, short the notes, the bonds? You got to make your mind up on that, don't you? Because what you're doing is you're walking in then to, even when the market reopens for the holiday trade. I think we open Sunday night again, and we stay open into Monday morning early. Very thin trade. When I tell you thin, understand 100 lot order is going to move markets. I have no idea if they reach a deal what that means to these markets. Number two, Memorial Day is a United States holiday. All the world markets are open. So I can't tell you what's healthy for you, okay? I personally don't like to put my money at risk in an event I can't control. In the eurocurrency, you're still fully embedded. Hard rallies still going to be sold, probably between the 100-day average and the 18 over time here. British pound, same thing. No currency can withstand what's going on with the dollar with these interest rates. That's what you're seeing. Bitcoin never did participate in a favorable way on this whole rally that we've had here in certain markets during the debt ceiling arguments. And that's interesting as can be. It broke away from it. Now we get to the Brent WTI. Well, you can see where you're at on it. In the July Brent, coming up, your resistance, Bollinger Band. Be very careful right there. I think the pros came out. Gone so long. Still an uptrend. They're probably buying here at the 18-day average again. You're at 71.89. If I was Miss Grisholm, the Secretary of Energy, I don't even know what her name is because she's not very important. I'd be begging that this market get down and that my president and I start looking better and we can buy or get tenders to buy some of that oil. I don't know when the tenders ended. Remember, she put them out and they ended at a certain point and they were for August delivery. I just don't know. In any case, you're at the support zone. If you take this low out right over here, and we can take a look, I think, and see what that number is, that would do damage to the chart. Barring that, this chart's still looking bullish. That's 70.67. So until that number's taken out, wouldn't be surprised if the pros are nibbling, looking for up there. In gasoline, no. I told you yesterday, I think that it was buy the rumor, sell the fact. And I feel pretty good with what I told you. Now you're flirting with getting the red line to close under 79. If it does, it could fall back to the 245 level. So be a bit cautious here. The first major supports, and it doesn't have to get there. It's the closest main moving average, but it's already at them. And if it closes under them, you open that up. But you're into the first support. It is certainly not a buy that I can see. And in nat gas, I've moved to the July. So join me with that. It's bearish right here. Will the market retest these numbers or not? I do think a major bottom is in on the weekly chart. Will the dailies hold up is going to be the big question. You went bearish again today. If today's high is taken out either on Friday and or I guess it would be Tuesday because of the holiday, then I think you go back to the Bollinger Band. But right here, this should be the support zone of the market. So again, take advantage of the sale that I have. How do you do it? Just move your cursor up here. I'm Ira Epstein. I'll see you all first thing in the morning. Have a great night.